On Friday, we saw a $14.8 million out the money put order, which is very rare to see something like this. Again, $14.8 million in premium for the 395 strike, which is quite a bit out the money. This is for the 421 expiration, so it's not that far out in terms of expiration either. And you can see over here, this one was above the ask. So this person really wanted to get into their position, and it's very interesting because if you look at the spot price where they bought this at 416.07, you go over to the S&P 500 over here, you can see that 416.07 happened to be the high of day range that we had on Friday. See over here, right around this time period throughout the day. So it ended up being the high range after the gap was filled. Once the gap ended up filling, it just consolidated and then fell down versus previous times where the gap filled. And you can see in the past when other gaps have filled, it has just continued to the upside afterwards. So you can see over here, it had a different outcome after this gap fill up here, which ended up closing down for a pretty weak close on the day overall. If you look back over here at SPX's chart, you can see that we closed back in this ascending wedge that we had been trading within for a while. And if you compare this ascending wedge to the previous one, it is a smaller ascending wedge. However, still the chart structure applies. You can see as we've traded along this ascending wedge from the previous time, we did have a fake breakout up here in the start of December that then was followed by downside after it ended up being a fake out. Then it came back up to retest it again and then fell off of that. So as of now, we had a fake breakout that closed below the ascending wedge, which likely will have further downside to start off this week. And another note with that, SPY has actually seen a ton of dark pool activity as of Friday. If you remember from our Wednesday video, we were talking about how we only saw like a little bit of dark pool activity, nothing too small, but also nothing too large. On Friday, we actually saw a lot of decent sized prints. First of all, we saw an almost $1 billion singular dark pool print, which is pretty rare to see. This came in after hours at the 412.35 spot price. But even more interesting, you can see through here, we saw a ton of signature dark pool prints to amount to $3.2 billion worth of premium. This is a lot, and this is pretty rare. We haven't been seeing prints this large since like a couple of months ago now, or at least in around like early December. So it's been quite a while since we've seen large prints like this, like 3 billion plus, especially on a consistent basis. And you can see on here, this came in at the 416.72 level, which if you just look at the small chart up here, this is literally the high that we've made so far. And just by going back to SPY's chart, you can see here that that 416 level is right around the high that we've made so far. So it seems like as of now, this is a pretty large sell and will act as a resistance if we do end up retesting it in the future. So definitely mark this 416.72 level on your charts. And then also keep in mind this 412.35 level, which this did hit after hours. And this ended up being 1.2 billion worth because there were a few other singular dark pool prints right around this range that equaled up to 1.2 billion. So definitely keep these levels in mind, especially with the 3.2 billion one that we saw. If we continue to see a lot more of these larger premium orders hitting the tape, that can be a sign of a topping process of this move. So do continue to watch those prints, especially around this range. I also want to talk about Meta today. You can see, first of all, very, very large rally that we've had so far, especially after the earnings came out and we had a huge gap up. You can see, if you remember from a long time ago, I think it was back in like November, around that time, I did a video on a key trend line that we were approaching at the time that started all the way back here in 2012. It connected over to this pivot in 2013. And this is actually the same level that we've bounced off of so far, hit it to the tick and bounced very high. Unfortunately, I have not held my calls all the way till now. I did get out of them for a profit as it bounced up. But as you can see here, it did continue to go a lot higher to the upside. And we also broke through, based on this earnings, we broke through this line I have right here. If you scroll back and see where this line started, it is also yet again another key pivot. Now, if you drag this across, you can see that this acted as a support level, at least this range acted as a support level for the time being in July and August of 2022 before falling lower. But now, as of the earnings gap up we had this past week, we actually gapped up above this key level. So I actually expect this to get retested fairly soon. You can see there's a key supply zone up here here above 190. It's had 2 days where price went above intraday but was unable to hold on the daily candle and fell back below. Also on top of that, we saw a lot more put flow hitting the tape, especially for these longer expirations like the 119.24. So these leap orders and these whales that are buying these leap orders likely see the fact that we are very overextended right now, and at the very least we'll have some form of a pullback, likely to, again, the very least here around the 172-ish range to retest this trend line. So they're adding a lot of time because they know that the momentum, at least in the short term, is to the bullish side, but with time, there's a very good and likely chance that we do have a pullback to some degree to retest at least this level here. So I suspect that will be the case, especially in the next coming weeks, especially because it can't get above 190 as of now. We will see some weakness in meta. Still, for the most part, it has had a lot of strength as we've continued to the upside throughout this entire time since it bottomed around the early November time period. But just be aware that there's probably going to be some form of a pullback here. And this is a likely and valid in terms of risk reward short setup for the next couple weeks here as it's unable to stay above that 190 range, at least for the retest of this level. And then we'll decide if bulls or bears want to take the reins from there. Also, something very important that happened last week was this big pickup, or at least two big pickup candles on the dollar. You can see here that this was a fake breakdown, which typically means a lot more upside for whatever the chart structure is. You can see below this 101.50 level, we had a daily close, which just alone based on this daily close tends to mean there's going to be further downside. However, price reversed very rapidly off of this, and we had a big pickup candle on Thursday back above the level with confirmation would mean that there's a new reversal to the upside. And that's exactly what happened with Friday's candle, continuing a lot higher up. So this is a very bullish, at least for the dollar, weekly chart structure that likely will have a lot more continuation to at least the 105-ish range. This will act as a supply range, you can see here in the white. And what that means for equities is potential weakness going forward from here, especially the Dow Jones, which if we look at the Dow Jones, we can see here that it still is above its own downward trend line. Remember, this is the downward trend line that started at all-time highs for it. Each of the major indexes have a downward trend line, and now each of them have crossed their own respectively. However, the Dow Jones has seen a lot more of the consolidation phase compared to the big run up it had since October 13th. And yes, it's still above the downward trend line. However, there's potential weakness to come here from possibly another retest of this downward trend line like we saw before, which would not be as favorable for bulls on the second retest. So this is something that I'm watching right now, especially if the dollar continues with its strength, and that will have an impact on all of the indexes. And like I just mentioned, each index has its own downward trend line. I just showed you the one for the Dow Jones. Here's the one for the IWM. You can see here it broke out of its own downward trend line on January 11th from back here where the arrow is pointing. It has had a lot of continuation upward. Also crucial to remember, just because a downward trend line is broken does not mean that the entire structure we've had so far in this bear market is negated and we're just going to go all the way back to all-time highs because of one line. That's not how this works. There's a lot more to it. Also, back in 2000 during the dot-com crash, we did see a break of the downward trend lines on all the major indexes like NASDAQ, SPX, etc., and we still fell another 50% after that. Not saying we're going to fall 50% from now. That'd be pretty excessive. However, still we can fall back, retest this trend line, and see kind of where things go from there. So this is IWMs. You can see over here the same thing for QQQ. We had a key breakout on this one back on January 24, 23rd, around that time period, and then it continued upward after it broke out. And then lastly here on SPY, you can see we also broke out around that January 23rd and 24th date and have had continuous upside since then. So the major indexes have broken out of their downward trend line, and we've seen a rally thus far, especially based just off of a lot of short covering in the near term. However, a lot of those macroeconomic headwinds are still present in the market, and if you remember, the Fed's tightening process tends to have a lagging effect, especially on earnings. We're starting to see a lot of earnings not come in the best. Yes, the upside has been prevalent for earnings just in the near term, which I would argue is still due to short covering. We will see here in the next month to 3 months kind of how all of that is being digested by the market, and I believe that will have a lot more downside in terms of the overall effect. So we will see what happens from now on, but other than that though, appreciate you guys watching this video. It will be an exciting week, and I'll see you guys on Wednesday.